So Goldman Sachs threw a curveball, telling investors not only to sell oil, but to take the money and run. And the quake that hit Japan exactly 24 hours ago not only shook Japan again, unfortunately, but shook the confidence of the whole market, where investors started marking down their worldwide economic growth expectations. And this fear spread right through stocks worldwide and hit oil as well. Now, Goldman wouldn't put someone out to explain themselves completely, so we'll try to do it for him. Here now is Halima Croft, Senior Geopolitical Strategist at Barclays Capital, and Harry Rady, CEO and Portfolio Manager at Rady Asset Management. So, Halima, can oil prices keep falling if Libya and the Middle East is unresolved with all the unrest?
No, I mean, I think the Middle East will remain a big problem for the oil markets. I think as long as Libya is out, I think we're going to see higher prices. And the thing I think we need to watch is the Nigerian elections coming up this weekend and next weekend.
So you are unconvinced, A, by the Goldman call, and B, I guess oil prices have dropped about 6% in the last 3 days. You're not convinced?
No, I think that there's real upward pressure on prices coming out of the Middle East. I would look at something like the Saudis spending. I mean, they're spending so much more now than they anticipated. And they have a new floor price to balance their budget. We need about $90 to balance the Saudi budget. And that's if we have no political risks. We're going to be looking at a $90 floor.
Harry Rady, do you buy the lower oil price scenario, or what do you think of what Halima just said?
Well, we have a bit of a different perspective. I know that you think that micro and macroeconomics are voodoo, so I'll give you a short lesson. When oil prices go up, producers produce more. When oil prices go up, consumers buy less. Those are very powerful factors that will affect the future price of oil. Another variable, another data point that I'll give you is the backwardation of the curve. So my opinion is kind of irrelevant. All you have to do is look at the futures market, and it shows you that there's about 20%. The market's factoring in approximately 20% of geopolitical risk. And so we think that if the market were taking into account just purely the supply and demand picture, that oil prices would be 20% lower, and that when the geopolitical picture settles down, we think oil prices will go down.
All right, let's stay with your supply demand for a minute. I'm going to get Halima to respond. Let's stay with your supply and demand. If you took out geopolitical risk, which is really not possible, but if you did, are you saying oil would be, what, $85 a barrel or thereabouts?
Yes, that's what I'm saying.
And are you an oil seller right now, investment strategy-wise, to coin a term?
Well, we've been long the natural gas-focused E&P stocks for a while. But when the Japanese tragedy occurred, the natural gas stocks jumped up. So we were sellers into that, given the supply glut of natural gas. We've also been selling some of our oil holdings. But we believe there's a pullback coming. So we think we're going to get an opportunity to build that position back up in the coming weeks and months.
All right, so you're selling and buying. Halima, apart from supply and demand, otherwise known as price theory, otherwise known as microeconomics, you're a geopolitical expert, and you're sticking to your guns, I take it.
Absolutely, because we really do see potentials for further supply disruptions. I'm not sure it's easy for producers to add more barrels to the market right now. I look at a place like Nigeria, and I'm thinking of potentially of 1 million barrels of an outage going into the election cycle. That would be a big issue in the oil markets right now. If we have Libya out of the market, if we have potential big disruption out of Nigeria, then we have eroded a lot of our spare capacity. And I think the Middle East remains volatile politically. So I don't see that story settling down.
So it's a supply shock and a threatening of another supply shock. Demand can still be falling. People can consume less because of higher gasoline prices and whatnot. But you're saying supply shock, supply interruption from this political and military turmoil.
Yes, we see supplies remaining constrained. We do not think it's easy to add additional barrels to this market right now.
What's this story about Saudi Arabia cutting back on production? That is mean, nasty, and cruel. And I wonder why the U.S. government doesn't whack-a-mole them just a little bit.
Well, I think the problem is, even if the U.S. government wanted to sort of call the Saudis and ask them to do something, I'm not sure Abdullah is going to take that call right now. He's very angry with the White House over how the White House treated Hosni Mubarak. He's not happy with the democracy agenda in the Middle East. And the Saudis and the United States are kind of at cross purposes right now in the region. And that has implications for how Saudi will manage the oil market.
Harry Rady, I'm going to give you the last word, 25 seconds, because Halima has just said that your supply and demand argument, which sometimes works in pure microeconomics, doesn't work when you have supply shocks from political problems.
Yeah, the Saudis have just recently stepped in with 1 million barrels of production a day. In addition to that, at current gas prices, that's 5% of discretionary spending for the average consumer. Over 4%, many studies have shown that that's the pain threshold. So we're at 5% already. Consumers are going to cut back on demand.
Right.
And so I think that this is not based in reality and supply and demand. It's based in fear and speculation.
I love supply and demand. I love supply and demand, but I also think political shocks affect the price. But we will see. Halima Croft says no to lower oil prices. Harry Rady says yes, they're going lower. We're live tweeting right now, folks, at The Kudlow Report. That's all one word. And coming up, President Obama expected to come out swinging against the Republican blueprint for tackling out-of-control debt. This is tomorrow in Obama's speech. Our own John Harwood is going to preview the president's